Hi, I'm Nicholas Schneider, here with another gas market shipping update for October 2014. Since our last update, short-term charter rates for LNG vessels have increased to slightly above $60,000 a day for modern dual-fuel vessels. And rates may increase further into Q4 as countries begin importing more LNG to cope with higher power and heating demand over the colder fall and winter months. Although after a warm summer in Asia, LNG inventories in the world's two largest importers, that is Japan and South Korea, remain fairly high, and therefore cargoes may instead be diverted to South America and especially Brazil, where drought has reduced hydroelectric power generation, which may need to be offset by higher LNG imports. That said, any increase in rates may be fairly short-lived. There are more than 40 new LNG vessels scheduled to deliver between now and the end of 2015. And although there are several large Australian LNG export projects scheduled to start in the next 12 months, most of these projects won't start until mid-2015 or later. And even then, it will take some time for those projects to ramp up to full production and exports. Therefore, our opinion is that LNG charter rates for vessels will remain near current levels on average through 2015. In the longer term, our view is unchanged that the LNG industry will be back to a deficit of vessels by 2017. This is based on the current order book and the development of LNG export projects in Australia, United States, Russia, and Southeast Asia. As of now, there are two projects in the U.S. Gulf which have reached a positive final investment decision. That is Cheniere's Sabine Pass project, already in construction, and Semper's Cameron LNG project. In addition, there are two further projects which are awaiting FID after having received all permits from the Department of Energy and FERC. Those are the Freeport project and Dominion Cove. Now moving to the LPG segment, where things have been very interesting over the past summer. Short-term rates for LPG vessels rose to record highs this past summer for all vessel segments. This was most pronounced for the very large gas carrier segment, or VLGCs, where earnings increased to at or above $100,000 per day in June, July, and August. The increase was less pronounced for MGC vessels, where we expect less volatile rates, but nonetheless still rose to record highs of $35,000 a day, or roughly $1 million per month in September. There were two reasons for the increase in LPG rates. Firstly, rates tend to increase over the summer when importing countries import more to fill inventories in advance of the colder fall and winter period. Secondly, exports from the United States have continued to increase. In 2013, U.S. LPG exports increased by roughly 70% and have continued to increase throughout 2014. The reason for this is the continued development of shale gas production, which is resulting in natural gas liquids and LPG at prices which are competitive with the traditional exports from the Middle East. However, the order book for LPG vessels remains around 50% of the existing fleet for both VLGC and MGC vessels. And therefore, our opinion is that rates will fall in 2016 as the bulk of this order book delivers. However, until then, owners with LPG vessels on the water should enjoy healthy earnings. In summary, earnings for LNG vessels have remained weak due to fleet growth against insufficient growth of export demand. In the LPG segment, just the opposite has occurred, with moderate fleet growth against rapidly increasing export demand. That's all for now. Thank you for watching, and we'll be back in the new year with another update.